At least we can take the time. My name is Diana from TD Bank. Welcome all. It's always a pleasure to start to have a seminar to educate the community. I think this is one of the best steps for you to start, at least to get more knowledge. For me, knowledge is power. So the more you educate yourself on the subject, the better and the smooth the ride will be. For me, this is like a roller coaster. Go ups and down until the end, and it will be good. So I'm going to start presenting, but I'm going to give her some time to start.
Hi, I'm
Now
sorry.
you're back.
And I really thought I was talking. So I'm on my husband's computer and I don't know how to mess with his stuff. I got a microphone and everything.
Huge one.
So I didn't know how to mess with it. But everyone, thank you for joining us today. So I'm with the Bronx Chamber of Commerce and we help all businesses, big, small, even mom and pop shops, and we love to educate everyone on anything business wise, even just like such as home buying. So if we can bring education to anyone that you feel like they might need, the next one that we are going to be doing is how to fix your credit in order to shop for your next home. um Even little things like that is what we like to do to help every individual. So today we have Diana in partnership with the Bronx Chamber, and she's from TD Bank, where we bring these types of workshops and small business workshops and home buying workshops to everyone, to partake and just to educate themselves as much as they can. So Diana, if you want to begin,
Thank you so much.
you're welcome.
Oh wait, I cannot share my screen.
Now you should.
Can everybody see my screen?
Yes, we
Or not?
can.
Review and presentation. So for me as a TD Bank, I'm just going to talk about a little bit about myself. I have over 10 years with TD Bank. My position most focused on helping community go out there where nobody else wants to go to try to help the people because a lot of people feel that they're not ready to buy a house, or maybe because they have heard some story that you need such amount of money in order for you to buy a house. And sometimes that's not true. Basically, you have to focus and go to the bank and ask the expert and say, hey, do I qualify based on my income and based on my credit? It's good to you to know before you say yourself, no, I cannot do it. Let the expert tell you a no. And even if we say no, go to another person. Maybe somebody else will tell you yes. But at least you prepare yourself for the first step to buying a house. I got customers that they come, look, I only make $30,000 or $25,000. Can I buy a house? But people always think is that, hey, I want to buy a house, a huge house. If you can only afford to buy a condominium right now, that's all you can afford. Maybe you can just try to buy that first, and then you can move on to the next step and try to buy a house. Never wait until you say, I'm going to have this amount of money to buy a house, because maybe that time will never come. Are you ready? Maybe most of us will not be ready to buy a house. The step is very frustrated. You get stressed out a lot because the bank will ask you a lot of questions, everything about your accounts, everything about how you be doing financially. So it's always good to keep all your account prepared, because it's going to be like, again, like I said, like a roller coaster up and down. So again, like I mentioned, the process of buying a home is very exciting and complicated. But the better you understand the process, the better it is, in a way that you'll be able to understand more what's going on. Do your research. Even though you can even use seminar like this, or you can try to use Google. And at least when you go to a seminar or when you meet a person that's helping you, you'll be able to ask them questions. So not familiar. Maybe you don't understand something that we discussed, or before you go to the bank, just ask them directly and say, hey, I was just reading about this. Can you give me more information about the topic? So the step to take a buy a house, you go to a bank. The first thing that will be, for me, I prefer the customer to be a little bit more ready. Try to get everything you can. Let's say 2 years of tax return. Even though you might not know what to take, but it's better for you to take extra stuff instead of when you go to the bank, you might need some information. So 2 years of tax return you need 2 years of W-2 if you're self-employed, 2 years of 1099, 2 years of bank statement, and 1 month of pay stub. Basically, the bank wants to know what do you need. What do you need exactly? So it's good for you to be prepared because we're going to ask you a question. Then later on with that, we're going to determine how much will you qualify based on information you provide. And again, as well, too, check your credit because they say, for example, you go to the bank and your credit is not good. The minimum credit score that we need is 620. Oh, I'm burning out. Sorry. So a 620. So it's always good for you to find out before you go in the bank how's your credit. Don't tell nobody, tell your financial. It's good for you to tell your financial today and say, hey, my credit score is 630 or 640, but it's good for you to know before you go to the bank. The simple fact that when we pull it, we might drop a couple of points. So if we need 620, the minimum, and your credit is like 615 or right in there, instead of helping you, we're going to go backwards instead of helping you. So it's always good for you to check your credit before you go in the bank, just in case your credit doesn't meet the criteria that we look for. There are several, sorry, there are several programs that the bank qualify people. Let's say, for example, we do have first-time home buyer. Basically, that one, the one the TD Bank or either banks, they're very flexible. You can put as low as 3.5 when you do. So other people feel like, hey, do I need 20% down? No, you don't. You don't need 20% down. The only thing is that you do have to consider is like you might need some cash, not at $50,000. It all depends what amount are you looking to buy. What do you need to make for your home reality? Basically, is that you need commitment. If you really want to buy, you have to put yourself in there and say, hey, I'm going to do this? Because you have to work with the bank. If the bank requests you some information in order to, hey, your W-2, we need a W-2 in order to give you a pre-qualification. And if you don't have them, it's always good for you to be prepared and try to rush and get the documents that we need so we can help you out and trying to help you get the mortgage that you need. The next step that we need is you need to have a pre-qualification in order for you to buy a house. I'm going to ask back and forth with the realtors that we have here online just to ask them. So Felix, do you got customers that sometimes they go trying to look for houses without pre-qualification?
Every time.
So I want to ask you, so what do you guys suggest to them? Because a lot of people feel that maybe they ready before they go to the bank or they do.
I always tell them, if they've already spoken to someone about it, if they, even if they haven't run their credit yet, just to get an idea of how much they can afford. And if they haven't, then I usually recommend they do, not necessarily because we need the pre-approval to work with them, just so they can have a realistic number of how much their budget is and should be. And then if they don't have anyone to work with, then I give them a couple of options, including Diana.
Will you be able to show me a house without pre-qualification?
Most other agents don't, but yes, we do show houses without pre-qualification.
Anody, what about you? Do you show houses without pre-qualification? Do you think that customer qualify based on what they tell you, or do they really need a pre-qualification?
It all depends, right? So as an agent personally, I like Felix, I'm willing to show houses to somebody that we're working with prior to them being pre-qualified, just to get them an idea of what's out there, right? Before they have decided on their criteria. But it is a point of discussion. Houses can go for a little to a lot in terms of price. And without having that pre-qualification, we're doing ourselves and the client a disservice by not focusing the attention on properties that are realistic. And there are some properties that here in New Jersey, as an example, will actually not allow you to see the property without a pre-qualification. So it is on a case-by-case basis.
Got it. I also want to ask you guys another question. If I go to an open house, will you guys give me more details? It's almost the same thing as showing a house, but will you take that customer serious or not? Just because they walk in and they say, I wanted to see this house with this open house. How do you feel about customer not having the letter, the pre-qualification?
Yeah, for us, I mean, it's not pre-qualification that the end all be all, but if they do have it, we do take it more serious. We do give them more time because we know that they're more ready than a buyer with that one. So they kind of move up in that priority list. You know, our time is limited, so unfortunately, we won't be able to show everyone every single house they want to see. So if they do have a pre-qualification, it kind of gives them that priority, and we know that they're ready to go, and we know exactly how much they can afford, so we can focus our attention on the houses that they can afford rather than shooting for the stars and showing them things that they may not necessarily be qualified for.
Okay. What about you, Nelly? Do you want to add something to it?
Yeah, just to add to that, you know, we as agents are always ready to help anybody buy and find and buy their home. But just because we are ready doesn't mean that the client is. So when a client comes to us and they have all their ducks in a row, they have their pre-quals, they have the criteria, they know what they're looking for. That level of readiness just gets them up higher in our, I guess, priorities, because we know they are ready to move now versus later. So if you do have your pre-qual, if you do have your criteria, if you demonstrate that you've done your research and you are ready on your end, then that just helps us help you faster. And because of that, we get things done quicker than we may otherwise be able to. Again, because we are limited, right? So if we have, I said, book of clients and some are at a certain stage versus others, then we have to work in that level of priority.
Okay, so our first step out of 6 is like look at the pros and the cons. A lot of customers, they always think of what they want or what they need. How are you guys as a realtor help the customer focus exactly on what they need and not exactly on what they want? Because a lot of times customers focus on something that they might not need because they have been dreaming about the house that, hey, will you be able to afford that actually? Because there's one thing that you'll be able to afford it and one thing that you'll be on the budget, like tight budget that you not be able to make a barbecue. Will you guys help the customer with that?
Yeah, so when we first meet the client, when we get introduced, well, however means we get the client, we like to have that honest conversation first, saying, what are you looking for? Have you looked at any houses already? Is there anything that you like? And ask the pre-qualification questions. And then from there, we may show them, go out with them once or twice just to build a rapport and to gain the confidence. But once we're in that first showing or first meeting, we really like to focus and hone in on what they're really looking for and what they need. So part of our kind of our own little pre-qualification is, well, what are your wants versus your needs, right? So you need 3 bedrooms, you need potentially 2 bathrooms. This is a big family, but do you really need a big yard? Is that a want versus a need? So we try to focus and hone in on that, because then that'll help us, one, identify houses that are in your needs first versus your wants, and kind of give us the priority to make sure that we send you there and show you those type of houses first. Because when it comes, especially in this market, if you find something quick, you need to act fast. Because in less than a couple of days, you could have an accepted offer. So if you're not ready with a pre-qualification, if you don't know what your needs are versus your wants, you may lose out on a good opportunity and something that fits you, just because you're not there yet, right? So, and I think Anody can probably expand on that because it happened to him recently.
Oh, definitely. It all comes down to, what is your why? Why are you looking to make a purchase, make a move? Most people don't buy houses just because. There is an underlying reason why you're going somewhere, right? So we have those honest conversations, and then we try to focus on how do we get to your why, and how do we meet those challenges? How do we get to your needs? If we don't have that focus, you will start to see many houses. You'll never make a decision. and you will miss out on great opportunities because you didn't act quick enough. We've had several clients recently where their needs and their wants were not too clear. And because of that, by the time they realize what was best for them, the houses that we had seen that they then identified as houses that would have been great options for them were already gone in a matter of days. Because again, if we find a good house, more than likely somebody else has seen that house or will see that house, soon after you. So you have to act quick, especially in this market where rates have dropped, where housing the demand is quite high. Not being focused, not knowing what you need, and focus too much on your wants versus your needs, that can be detrimental to you achieving your goals and getting to that why.
Got it. As a loan officer, I do understand as well what you need and exactly what are you looking for. For us, we just qualify the customer based on the amount that they qualify. Let's say you qualify for 500,000. We don't tell you go buy a house for 300,000 or 400,000. That's your choice. But that's something that the customer had to think about it one day in the process, because we most likely you guys will recommend something, making the numbers and stuff like that. What I always tell the customers, if you find a house that is in your budget, let me know. I give you a break, or what are the numbers will be and how they're gonna look like. At least you have a, because some customer look for a house and then when we tell them the numbers and they like $3,000, basically is that they feel surprised of a number that we provided to them, and they're like, let me explain to you where the number is coming from, about the taxes. Let me explain to you about the home insurance. So the customer needs to be familiar more on what they want and what they're looking for. Since they're a different type of property, you never know what exactly you're looking for. To take the second step is to take homeowner education courses to get certified. That's a good thing, again, to get knowledge. Knowledge is power. The more you know about the subject, the more better it's gonna go. At least you'll be able to ask question and don't feel so type of way that, hey, I don't know what's going on with my loan. And some customer, you ask them, so how was your process? And they're like, oh, I don't know, I just closed. You need to get more involved. Like I tell all the customer, at the end of the day, after we close, this is your problem. This will be your bill. So it's the more you know about it, the more you can take control of what your bill's going to look like. Like say, for example, again, if you know you qualify for 500,000, but then you make the math and you say, you know what, I might buy a house for 200,000. Why? Because I want to save some money. At least for barbecue, when the barbecue comes, I need to have a little bit of money to make some barbecue, because some customer, they are so tight that not even for that is enough. And the third step is, again, to get pre-qualified, pre-approved by a lender. You can go to any banks. If you have any question about something and you're not sure that that bank gave you the right information, you can feel free to go to the next bank and act like you are new to a new conversation. You don't know anything about mortgage. At least they'll be able to ask you, or you'll be able to ask questions that you already asked to the previous lender and compare them. Why not compare lenders to make sure that you're getting the right product that you need and the right service? Find a realtor. So again, I'm going to ask some questions to the realtor. Sorry about you guys. So it's
That's all
basically
right.
every time that you guys show me a house, are you guys going to charge me individually, or you guys going to charge the customer? How's the fee start with that? Because I think that a lot of customers feel some threat that, hey, the realtor is going to charge me money just to show me houses. Is that true?
Yeah, we get paid in Dunkin' Donuts coffee. No, there is no charge when you're working with a buyer's agent. Usually the way that the agent gets paid is at the closing from the seller side. Now, there's been talks that, some people are suing the Realtor Association and they want the buyers to pay their side of the commission, but that's not going to happen anytime soon. There's just talks about it, but there is no charge upfront or down the line for an agent on the buyer side, only on the seller side.
What about for the houses? Do you guys have a limit of how many houses you guys show to the customer? Do you guys get tired of a customer showing their houses and they don't pick the right one? How that works?
Well, we do get tired of people. No, there is no limit. It just depends how much we like you at the end of the day, whether or not we keep showing you houses. No. Yeah, no, there's no limit. We will show a client as many houses as it needs. Obviously, the longer it goes, we'll have different conversations with them to make sure that we're showing them the right properties, to make sure that their criteria is correct. Is there a reason why we've seen 20, 50 houses and that hasn't been the case? Are they putting offers in and they're just losing out on the offer? Should we be putting in higher offers? So we'll have conversations along the way, but there is no limit on the amount of houses we show a buyer. Just whatever it takes in order to get you your new home.
Can you guys at least tell me what's the benefit of having a realtor?
You want to take that one,
Yeah.
Natalie?
Yeah, so pretty much, if you think of it this way, in most cases, when you see a house on Zillow.com, Realtor, Trulia, any of these sites, and you decide to go to an open house, as an example, the large majority of those cases, you are seeing houses being sold by other agents. Those other agents do not work for you, they work for the seller. Those are selling agents. So the owner of those properties has already employed a realtor to look out for their own interests and support them in the sale of their home. Meaning that when you interact with the selling agents, they are not necessarily looking out for your interests, they're looking out for the sellers and the owner of those houses. By working with a buyer's agent like myself and Felix, you are bringing somebody onto your team who you're not paying for, that does have a duty to look out for what is best for you and can leverage their experience to help you identify homes, negotiate on homes, and just get you the best deal, value, and terms that would align with whatever goals you're trying to achieve. And again, it is at no cost to you. Owners most of the time already employ an agent to take their side. So why not do the same on your end? Why not get the professional help that you need to help advance your position, that much further, that much quicker?
Okay, so I just
You
want
have a couple of questions. Yeah, I noticed that too.
Yeah, can you hear me?
Yeah, so we
Okay.
do have a couple of questions in the
Yes.
chat.
So
I was
somebody
gonna.
asked, I'm not sure if you already answered this, but does pre-qualification mean that I qualified the mortgage?
So pre-qualified basically is that we review your documents and everything based on what you show us, you pre-qualify. When we do pre-approval, we actually pull up your credit, and it's like more like 100% that you are approved based on your credit. The pre-qualification, we don't have to pull up your credit, but it's always good to know your credit. And the pre-approval is the one that we put up your credit.
Another question, what about first-time home buyers program that provide monies for down payment?
So every bank, they do have a system for first-time home buyers. A few of them that our bank have is that there's a program that we have is PMI, that you don't have to pay private mortgage insurance if you're not putting a 20%, which allowed the customer to increase how much they be able to purchase, because now they have a window that they don't have to pay for that private mortgage insurance. So it's good to ask different banks what different programs they have for even the city as well. They do provide grants. So it's always good to get involved. The bank is not going to tell you so much, hey, we know that this agency is giving you this amount of money. We do, as a TD Bank, we work with community centers that they do provide some type of grant, but maybe that grant you don't qualify. Maybe that grant is not for you. So it's always good to search for those grants for first-time home buyers.
Next question, are there programs that pay closing costs for first-time home buyers?
That is a good question. Some banks, they do offer that options to pay for the closing costs, or they can help you out as well. There are different options. They can put the rate, what they give you is a higher interest rate a little bit, and then they can roll over some of the closing costs with that. As well, the realtor can negotiate. Sorry to jump you guys in there. Some seller credit. What is the seller credit though?
Yeah, so seller credit pretty much means that you're rolling in as part of your loan a certain amount that then the seller has to give back to you. So let's say you're buying a house for $200,000 and you tell the seller, say, hey, the house is listed for $200,000, but I really wanted to pay 195. But if you want, I can give you the $200,000 as long as you give me a $5,000 credit at closing, so that way I can help with the closing costs. So you're in the contract, it'll show like it's a $200,000 loan, but then in reality, the purchase price would be 195, but you get that extra $5,000 to help you out with the closing costs. And it's a great way to save, on your closing costs and be able to come with less money out of pocket. And it's something that we negotiate up front and make sure that if that's something that you want, we make sure we get that into the contract before you close on the property.
Thank you. Another question. What if the mortgage you receive is more than the cost of the home purchased? Do I have to return the difference, or do I get to keep it since I have to pay it back?
So in other words, they get a mortgage for 200,000, the house costs 180, something like that?
Yes,
So
exactly.
basically, you have to understand that they say like the pawn shop. So it's basically, if you buy in, the lender is only going to lend you the amount that the house is the purchase price. So if the house is 180, that's how much we're going to take over. We're not going to lend more money than what the house, because we're the one losing the money. We as a lender, in case you stop paying the mortgage, we're going to take over the house. So we lend you more money than what the house costs. When it's time for us to sell it, then that means that we're going to lose money. So the bank is only going to lend you money what the appraisal price come back. If the appraisal come back for 180, that's how much the bank is gonna lend you the money for 180.
So another question. Suppose I find a house on my own, do I still have to pay my realtor's commission?
That's a good question, though, right?
It is.
It's an excellent question.
It's an excellent question. It depends. It really depends. So if the house that you find was in Zillow and there's another realtor that's selling it, then because the seller is paying for the commission, then you don't have to pay, right? But we would still represent you, even though you're the one that saw it online and maybe went to an open house. We could still represent you in the purchase and get paid by the seller, not by you. The only way that you may have to pay a commission is if you sign a contract and the agent that you're working with wants to hold you to the contract, and say you end up buying the house from your neighbor, who there were no other realtors involved, and they find out that you bought a house even though you have a contract signed with them, they may sue you for their commission as part of the purchase. Not something I would do personally, but there's a chance that can happen if you have a contract and that contract specifies that their commission is due if you buy a house. And sometimes even if you just rent a house, they could still earn a commission that way.
Yeah, so just to clarify on that point, and like I mentioned earlier, in most cases, when you see a house online, if you go to an open house, if you just do anything when it comes to buying a house, in most cases, the owner of that property has hired a realtor to represent them. That owner is the one paying the commission. They have an agreement between the owner and their agents that no matter whether they themselves sell the house or if random Joe Smith on the street comes and buys a house from them by themselves, no matter who it is, there's a set commission that's being paid, and that's being paid by the sellers, never by the buyers. As I said before, as a buyer, you shouldn't be paying commissions. The only exception to that is what Felix alluded to. There are some agencies, and this is not most, but it's a good number of them. So be worried that before they even show you homes, they will make you sign a contract. That contract is saying that, hey, you'll work just with me, nobody else. I will dedicate all my time to you. I'll do whatever you need me to do. But because of that, undivided loyalty, I need you to just stick with me and not replace me. Should you sign a contract with an agent that says that, And should you then not use that agent, then because you signed a contract with that individual, you may be liable for any commissions that they would have then lost because you violated that agreement. Again, not all agents do that. We don't do that. We don't believe in those agreements. So do be worried that there are some agencies out there that would make you sign an agreement and will potentially enforce it should you violate it. So keep that in mind.
Yeah.
And that could be a little bit tricky because basically sometimes you might think that you get well with the person, and then they start showing you houses, they start giving you attitude, and now you're stuck with that person. Now as a home buyer, you're gonna feel type of way, a little bit uncomfortable because now you're stuck with this person, and you can look for another realtor to just help you find a house. So it's a little bit tricky, that part of that.
So going on with that question, how do you find a buyer's agent?
You give us a call. Most agents, if you reach out to someone on Zillow, if you submit an inquiry, you probably have like 5 agents call you the next day. You know, all you have to do is pretty much say you're interested in buying a house, and you'll have a bunch of agents going out there to try to get your business. It's not hard. I mean, you can do your research on Zillow. They have like ratings on local realtors. You can do searches there. You know, you can ask your banks. You know, you can ask if you know any lawyers or friends. It's not hard to find a realtor. It is hard to find a good realtor, though. That's a big difference. You know, a good realtor, someone that has the experience and can negotiate on your behalf and has your best interest, rather than just trying to make a sale. You know, it's a difference between the two. You know, a good realtor will make recommendations and still ultimately go by what you ask them to do, but they will always be there to give you their honest opinion and be, you know, upfront with any information that you need to know.
And all of their information will be emailed to you right after this. So if you have any further questions after the webinar is completed, or even if you want an agent, there you go, right here. So another question is buying a foreclosure different than buying a house? Are there different rules?
Want to take that one on there?
So yeah, I think the answer is really yes and no. It depends. Foreclosures are pretty much somebody could not or just stop making payments on their mortgage, and the bank then repossessed the house and is getting rid of it. Meaning that on the owner side, there's a lot going on. Yes, it is different from just selling their house regularly because they're in the process of losing said house. But on the buying side, there wouldn't be that much of a difference for you. You'll see the house if it's available to see. You'll put an offer for the house. Your agents would negotiate with the other side on the terms of that agreement. And from your perspective, you are just waiting for a decision. On the back end, there is a lot going on in terms of how that house is being transferred over to you. So it can take a longer time than most purchases. A foreclosure or a short sale, which is a step before you get to foreclosure, can take anywhere from, you know, as soon as 30 days if you're lucky, or in normal cases, quite a few months, depending on where you are in that stage. So from your perspective, the way that you go about buying that house won't change. What changes is how long you have to wait before you can actually, one, find out whether or not you got the house, and then two, before you can move into that house.
So another question is buying, what about house disclosures? Does the seller have to tell you everything that is wrong or what's wrong with the house?
Depends what state you're buying. But for the most part in New York, no, they do not have to tell you. They can sign a waiver saying that they, you know, especially with older houses, saying, we don't really know the conditions of, all these things. Because I don't know that and I'm not going to disclose it, I'm going to give you a $500 credit at closing just so that you don't ask me any more questions, pretty much. But it is, for the most part, up to the buyer to make an informed decision, and that's where inspections are important. That's where, and even that's imperfect, right? Because inspectors can look inside walls, they can look everywhere, right? So they won't know whether or not you have, something underground that shouldn't be there. They don't know if you have wiring issues inside the walls because they can't see through walls. So it's still imperfect. They still have cases where things happen a year or two down the line, and I've had buyers say, hey, the inspector never showed me this, but it now went bad. What can I do? Like, unfortunately, once you close on the house, there's no warranties. They don't have to disclose anything, and anything that you find from the inspection is really for your information purposes, and to make an informed decision before you buy a house.
So saying on that one, what about home inspections? Who pays for that, the buyer or the seller? And can the repairs be negotiated in the price of the purchase of the house?
So the buyer pays for the inspections. And yes, if the inspection report comes back, even after you agree to a price, if the inspection report comes back saying that it needs a new roof, then you have the chance to go back and renegotiate based on that fact.
Okay, and so should I stay clear of agents who present a contract when purchasing a home? That was back to when you guys were talking about contracts.
Not necessarily. Just because you sign a contract doesn't mean that they're gonna stiff you. I mean, some agents do like to sign it just because they may be busy and they want serious buyers and they don't want to waste their time with someone that's just, kicking the tires. And so they do want to see a contract, whether it's and there's a time period too. So, it could be, you could make it as short as, 10 days. If in those 10 days you find something, then whatever. But there's agents that do want, in good faith from the buyer, to have that contract signed. It doesn't mean that they're going to be a bad agent or they're going to hold you to it. It's just that they feel protected with it. So I wouldn't say you steer away from it.
So when somebody does pays for an inspector to come in and inspect their house, should they get a second opinion or should just they stay with the first one?
Depends. You are always welcome to be part of the inspection. So it depends on are you asking about the seller side or the buyer side?
So the question says, what does the inspectors inspect and do I need more than one?
So the inspector inspects the major components of the house. So roof, foundation, electrical, plumbing, and I'm missing one more, but can't think. There's usually 5, and I think I only mentioned 4. Anyway, so they inspect those bigger things, and they'll tell you, and anything they find along the way, they'll point it out and say, this wall looks like it has humidity, so you may need to check on that, or we need to look further into it if we can. So if as part of the general inspection, something comes up where there might be signs of termites or signs of something that's specialized, then you might need to get a specialized inspection to come back in to say, hey, are there termites? Is it active? Is it something that was just there from the past? So you may need a second one depending on how the first one goes, but not the same type of inspection. It'll be a more specialized inspection. So if there's another thing, if there's an oil tank somewhere, you may need to have that inspected by someone else separately. If there's a septic tank, you may need to have that inspected by someone else separately. The general inspector wouldn't necessarily cover that. But usually the general inspector will say, you may need this second inspection based on that, or they will recommend it or not, and it's up to the buyer to decide that.
Yeah, and just to add to that, not all inspectors are created equal. There are some that offer more than others. And some of these inspections, some of these insights, depending on who you go with, they may be able to go a bit further than perhaps somebody else. So some inspectors do oil tank sweeps, some inspectors do radon and termite and all these other specialties that perhaps just a general inspector may not. And of course, all of this comes at a cost. So it is important that you don't just Google and find and go with the first one that you see, but really go and speak to 2, 3, 4, 5 inspectors. Ask your agent to give you a few recommendations of who they've used in the past, who their clients have used in the past, and compare, right? Yes, these can be expensive, but do you rather pay a few $100s now upfront before you buy, or do you want to pay a few $100,000 later on when everything comes crashing down? So spend the money upfront just so that you can avoid spending a lot more of it later on.
Now I know from my past home buying, because I know somebody said how expensive is an inspection. Now an inspection is something that you pay for. So if you decide to not go with that house, you basically lose that money because you used it for that inspection. So you don't get that money back. So that's just something to know. So another question is, how much money should I save before wanting to buy a house?
It all depends. It all depends how much you're looking to buy a house. It's 3%, 3.5 of the purchase price that you need, and then you have to calculate, where exactly are you trying to buy. So that's why it's good for always go to a bank and say, hey, how much do I qualify? Oh, I'm looking to buy a house. How much it will cost me? Or how much do I need to save in order for me to get the house that I want to buy for this amount?
And that's the only questions I see so far at the moment. So if you have any questions, keep bringing them in, and then we'll continue with the presentation.
Then don't be shy about asking questions. I think that asking questions is the right thing, because sometimes we might not cover all the questions that you have. So at least if you bring it out there, at least we'll be able to answer those questions that you have already. So getting a loan, again, you need 2 years of tax return. And you need 2 years of W-2. So let's say, for example, you have a few W-2. The bank is not going to judge you because you have a whole history of changing job. The banks want to know how have been your progress for the past 2 years, your path. So let's say you work 6 months in a different job and you change job. The bank is going to question you, when do you left that job, and they're going to verify your previous job. Well, they're not going to ask you, why do you left that job, or you cannot get a mortgage because of that. You don't have to stay for 2 years in that job just to get a mortgage. If that's okay, nobody would get a mortgage for now, because a few people change job doing because of the pay increase or something else. But that doesn't stop you of getting a house. As long as you have 2 years of tax return, even what covers you as well that a lot of people don't believe. If you get Social Security check, or you get pension, or you get SSI, you still qualify to get a house. Not necessarily you're going to have a huge house. It all depends how much they pay you monthly. So you don't need to have been working for the past 2 years or have W-2. As long as you show some type of income coming your way. Let's say as well, if you have child support. If you have child support, we qualify that as well as an income. Because that we're going to verify the child age to make sure for how long you're going to be getting child support to qualify you and base that amount. So it's always good to communicate everything that you feel that it might not be important to you, but for us, everything that you get is important to us, because that will qualify you as a customer. With the credit report, if you know that it's not too good, try to get help before you see a bank. First, I believe that you had to ask yourself a question. How much money do I have? Maybe do I have to have a little bit more? Well, how's my credit? I'm ready to buy a house, because sometimes you might have some question. And if you feel that you're not going to buy a house for now, just to try to take some seminars and say, you know what, after taking this seminar, I believe that I'm ready. I'm going to go to a bank and I'm going to ask them, how much do I qualify based on my income? And then you decide if you're really ready to buy a house, or you want to wait a little bit longer. With your pay stub as well. Let's say, for example, now through COVID, we are a little bit different. Instead of us sometimes calling the job to verify that you still work there, we're just asking you to show us a proof of income, like your pay stub, your current pay stub. So we're going to be asking that constantly just to make sure that you're receiving some type of income, because we do understand that the process have changed and that everything has changed. The only difference that we have changed a little bit is that we're not interacting more with customer. We're not doing face-to-face because of COVID. But if you have any question, you can always call the bank. You can always ask information on how to buy a house. So we need 2 years of tax return, 2 years W-2, 1 month of pay stub, and what the credit score, 620. So I do want to have a question. Felix, what's the minimum credit score that we need?
620.
Just in case. What about you? How many years do we need for a W-2?
2 years.
So, and again as well, always take of what the lender is asking you, because a lot of customers go to the bank and we ask a question and they always want to provide extra stuff that we don't need. If we don't ask, it's because we don't need that information. So basically, let's go to the pros and cons. I think as renting, you had to think about it. What do you really want to do? You spend 5 years, let's say, making somebody else richer. Instead, you can try to get a house, affordable house that you can qualify based on your income now. And then you can use as an investment. The investment is that you're not paying nobody mortgage, rent. You're actually paying your mortgage for your future. So it's basically, you can use as a collateral, you can use as an investment. And if you need to take in the future some cash against that property, you'll be able to use it. You also have the advantage that you own your own property. Well, that one is a good part. But let's say, for example, something damaged. Then that one is the bad part, because now it's all on you. Now you had to pay for the plumber. Now you had to pay any cost that something damaged. So you had to treat your house a little bit better than we used to treat your apartment. So I think that you also have to take another seminar on how to treat your house after you purchase it, so you can avoid trying to break things and you know you're gonna pay for. So it's always, I think that they should give a seminar based on that.
We should
And
start
those are
a
just things like that.
DIY seminar.
I know, right? It's basically it's like try to fix the house.
Yeah.
And the bad thing about it is that you cannot fix it yourself some of the time. So you also have to get an expert or somebody who can be able to fix your house. You cannot just fix it yourself. So when you buy a house, you always have to save as much as you can, because now that you have a house, now you have more responsibility. Advantage of that too is that you can do a tax deduction, because now you're fixing all this stuff and you can claim it on your taxes and say, hey, you know what? I am paying mortgage, but at the same time, all this stuff broke and I fixed it. But it's always good to keep your receipt of all that stuff. The freedom, like I mentioned before, now you are free. You can do everything you want in your house as long as they don't call a cop because you got loud music. That'll be one of the things. But at the same time, it gives you the advantage. You got more privacy. You got more personal choice. You got more space. So it's always good to buy a house. The only thing is might cost you a little bit, but at the same time, a lot of people don't realize that their mortgage, it might be the same thing, the same amount that you're paying your rent as of now. And right now you're making somebody else richer and nothing is for you for the future. Like the next step will be like building equity and it will be an investment for you. Do you guys want to add anything to it?
Yeah, I want to add, so even though that you might be paying a little more, a portion of that, when you're paying down your principal, it's really you're paying yourself, right? So the longer you pay yourself, the more equity you have in the house. Even if the value of the house doesn't go up, you're still paying down the principal and the mortgage. So when you go sell it, that difference between what you owe and what the house is worth is, you now get to keep. Another thing is mortgages are fixed for 30 years. Your mortgage payment will not go up. Your rent will go up every single year, right? So even though it might be a little more now, in 5 years, I'm pretty sure your rent is going to be a lot more than your mortgage will be. So it's definitely, in terms of investment, you're paying yourself and you're saving yourself a lot of money in the future. Might be a little painful right now, but it's definitely a future investment.
And just one last one on that, rent is forever. Rent does not go away. A mortgage, after you pay it off, the house is yours. That's it. There will be no more rent payments, no more mortgage payments. The house is yours.
Except for Uncle Sam, he'll come
Well,
after you.
And let's think about the interest rate. The interest rate are low as 2.3, and it might be a little bit lower. So you actually purchase it now because a lot of people feel this is the right time because of COVID. If you have cash and you're still working, I think this is the right time for you to do it. Uh, because in a way you cannot beat the interest rate. This is records of the interest rate. Like you're always thinking about what can I buy for this. So it's always good for you to go to a bank and find out, hey, how much do I qualify? Even if you're buying something small right now, but tomorrow that will be an investment property, then you can buy something bigger. So nothing can stop you from buying, just accept yourself. And if you a little bit of short cash, but it's always a solution to help you with the closing costs and stuff that you need. Look into the eyes lender. So like I mentioned before, it's always good for you to find out how much can you qualify, how much can you afford for a house. Because a lot of people focusing a lot on houses that they might not qualify, houses that they cannot afford because the taxes are very expensive, the insurance are very expensive. And not even that, what the bank does is that they take a debt to income and calculate how much you make and how much you pay monthly. So if you know that you have a few credit cards and you're trying to buy a house, try to bring a little bit down, at least to 30%, a little bit less. That will bring you your down payment to be less. That means that you'll be able to qualify for more. And also with the down payment, let's say if you have it at home, because a lot of people, they still believe in those beliefs that you don't trust banks and I have some cash at home, bring it to the bank because the bank will ask you for 2 months of bank statement. And if they're going to question you, where do you have that cash? And if you can have a good answer, your loan might be declined just because of that. So you have to prepare yourself if you have any cash, the debt that you have, try to lower down your credit, how much you own your credit. That way, and I don't think a lot of tricks that people fall for is that, hey, I went to Macy and they gave me a 10% or 30% down. Well, you have to think about it. You're really trying to buy a house, so you're trying to avoid spending, and you have to focus on that goal. And think about it that they might give you a discount at the beginning, but then with the interest rate, they might charge you that discount that they gave you up front. So there might be tricks, and you have to focus on, hey, you know what? I'm gonna hold on to that. I'm gonna just focus on buying a house. I'm not gonna get a credit card because other people feel that that might not affect the credit decision that the bank pick, but we do because at the beginning of the mortgage, we're going to pull up your credit. There'll be a hard pull that we're going to give you. And then before we do the closing, we're going to verify that you still haven't spent and go crazy and went to get a refrigerator or went to get a stove, a stove,
A car, yeah.
a car.
car. It's like now where you gonna park the car. So I think that first you had to stick with the goal that you have, be yourself commitment and say, you know what, I'm gonna buy a house. I'm not gonna spend too much money. I'm gonna focus on what I'm gonna do until the end of the process. That way you will know that when we pull up the credit again, you will still have the set debt to income and you'll be able to afford your house. Because it will be sad that before you close, TD Bank or any bank pull up your credit, and you might not qualify based on that.
So we have three more questions if you want to answer. So one
Yeah.
is, what are other pre-purchase costs that a new home buyer should know about?
I think we talked about inspections before, and that I think somebody asked how much. And depending on the size of the place, so if it's like a one-bedroom apartment, it could be as low as $250. But the bigger the house, the more room they have to cover, then it could cost you $600-700 if it's a huge house. So then you have the inspections. And right before you close, you'll have the appraisal. So that comes out of the buyer's pocket up front. And even if you don't close, if you end up, backing out for whatever reason, that's another cost the buyer incurs up front. I think that's it though.
Yeah. So that's a good question away that, hey, if you're a customer that you sure you not really want that house, why are you gonna put an offer and then you might back up from it? Because you're gonna lose the appraisal, which is a range between $500 to $600, depending on the property. And then you're also gonna lose the inspection. And at the same time, the realtor might not take you serious. So before you make an offer, it's always good to make sure that, hey, I really want the house and that's the house that I want. because that will be included in the closing cost that the bank is gonna let you know how much you will be charging. But there are some fees like the inspection is not included in there as well, in the closing costs that the bank provides to the customer. You have more question, right?
Yes. So should I buy before retirement or can I wait until after if retirement is within 2 to 3 years?
I think that that's your preference, how you want to do it. But if you're working now, I think now is a good time because by the time you retirement, then you will be smooth because you will have a couple of years already paying off, and you might be getting used to your debt to income in a way that, hey, my mortgage is $1,000 and I already paying easily. So you don't want to get retired and say, you know what, I might qualify based on this. So it's good to do it now if you can, because the bank will qualify you based on your income now. But in a way, you also have to think about it. You know what? 2 years from now, I might retire. My income might be this amount. So you have to compare what your income will be and what your income now. That way, when you retire, you will be better. What do you guys think about that?
I definitely agree. I would say if now is an option, definitely do it now. We don't know where the rates are going to be in 2 years. So it's definitely, I mean, 2.3%. It's ridiculous. I thought I was getting a good rate when I got her at 3.1%, and it just so now I want to choke you, Diana, because you gave me too high a rate. No, if you can now, but like Diana said, make sure it's still within your budget once you retire. So you have to, talk to your financial advisor and see what your retirement income will look like. If you're getting Social Security, if you have a retirement account, what is that monthly payment going to be from there, so that you still feel comfortable with that monthly payment later on.
So do you think it's easier to purchase a home now because of COVID? And also, what is a good rate?
So let's do for now. It's a little bit risk now because a lot of people, they're losing their job. They say in March, I have a customer that he just got in contract, and guess what? In the middle of the contract, he lost his job. And this is things that you as an employee doesn't have control that your company is gonna do. So if you know that you're gonna be in your job, it's good. That the bank make it easier. I think it's the same thing. Nothing has changed. The only thing is that right now, if you are self-employed, we are very asking more questions. We might ask you an extra questionnaire to see how your cash flow is going, how your business is going, because that will affect your application if you depend on your job. And as well, if you know that your job is good, you'll be able to do it fine. They're doing the same process. The only thing we're doing now more online. So now a lot of people that they're not too much well with technology, they are a little bit suffering on that part because now you have to do electronic signature, you have to do a lot of stuff online closing. So for some customer it might be easy because they're used to technology, but some customer that they're a little bit old fashioned, it might be a little bit hard in that end. With the interest rate, think about it. Back in the days, I don't know how long ago, people used to think that 6 and 8%, it was a good deal. But guess now every month it's going lower, then it's going up. So it's like a trick up and down. I think that if you can cash any interest rate below 5% is still good, but now 5% is too high now. Let's say if you can find anything under 3,
3%.
you
Yeah,
good.
3%. Yeah.
Yes, if you find anything under 3, you are good. And you will lock it in. If you can get a 2.3, you will lock it in without thinking about it. What the bank give you option is that if you go and find a house right now and you submit an application, the process takes 35 to 45 days. So if you come and you say, hey, Diana, what's the interest rate right now? It's at 2.3. Can I lock it in? Yes, you can lock it in for 60 days. That means that we got 60 days to close that loan. Before that, you have that rate for 2.3 into the whole 30 years. What a lot of people also think is that I do want to mention, a lot of people feel that putting 20% down is a good idea. It all depends on your preference. What we have noticed as banker myself is that if you put, let's say 10% now, and the bank gives you a 2.3 interest rate, and it's for 30-year term, you're gonna be locked for that rate and for that payment. But let's say after closing, you do 10% more. Now you're killing the life of that loan. So now instead of making it to 30 years, you become in 25, 26 years. So it's better for you to make the extra payment after you close. That way your interest rate will remain the same because the rate will not change, but your principal will go lower. So you're killing the life of the loan, which that would be the goal for any customer.
So somebody asked, is there a mortgage that also includes water and light?
No. Sorry. No. So the only place that you may have water and light included is in some condos and some co-ops, where they
Oh,
were included in the maintenance fees, but not in the mortgage. Mortgage is just the bank. They will pay taxes and home insurance for you, but that's it. Everything else, like I said, if you're in a building that has a board and you have an HOA that collects fees, then they may pay that on your behalf. But that's it.
all right. Somebody asks, is having good credit and a steady job will get you a better rate for the loan from the bank? Or will having great credit and a steady job get you a better rate from a loan from the bank?
Of course, I think that's one of the terms that you have. But as a first-time home buyer, the banks right now, they are focusing on your debt to income. How much is your income that you're receiving and what's your credit? So it's all the terms. So it's not just because of the credit, but credit made one part of it. Also your income. How's your debt to income is how much you owe, how much you spend monthly. So the bank focus on that thing and how much you put in there as well. I have noticed that when you put less than 5% on the mortgage, your private mortgage insurance, the one that you don't put 20%, is actually higher than when you put 5%. So this is a question that you want to find out with the lender. Say, if I put 5%, what will be the difference? And if I put 3.5%, what will be the difference on my payment? It might make a difference on that as well. How much you put in for down payment, what's your credit, and what's your debt to income? That was the bank would focus on your interest rate.
Somebody says, can you talk a little bit about HOH fees and what does it mean?
So it's HOAs, sorry. So it's Homeowners Association. They may, in a call, they may refer it as a maintenance fee. So it's really, like the accumulation of all the owners in a condo will come together to share common expenses. So like the garbage pickup, snow removal, lawn mowing, and they'll create a budget for the year, and then divide that for every owner, and that's how they come up with those fees. Some associations will include the water and the heating and electric, so therefore your fees will be a little higher. If it's just basic maintenance of the exterior, then it will be cheaper. So and if they have like a pool and a gym in the building, then you'll also expect to pay a little more. It's just really the amenities and the maintenance for the building. So they're known as HOA or maintenance fees.
That's included with your mortgage, or you're paying your mortgage and that's separate?
No, you would pay that separate to the property managers for the building or for the community rather.
But now that we talk about HOA, we can talk about different type of property. So it's basically, we got one unit family house, which is only one house, one family can live there. That one you pay yourself the mortgage and the taxes or insurance. But you can escrow that in a way that the bank will pay the taxes or insurance for you. Or you can buy a second unit house. The second house is a multifamily. There'll be two houses. What the bank do is that they will calculate how much of rental income you will get from the second unit of the property, and they will increase how much you qualify based on that. The only thing is that the bank would take only 75% from how much you were receiving for rental income, because not all the time you're going to have tenants. So that means that you're a little bit responsible in paying your whole mortgage by yourself. But in a way, it will give you a boost in your income, how much you qualify. A 3-unit family house as well is qualified based on that. And then we can go on to condominium. Most likely you become yourself an owner of that place of condo. You can still have to pay maintenance fee on that condo, but you are the owner of that. So if you want to do any change, you'll be able to do it. If you buy a co-op is more stricter. Now they're like investigators. They need to investigate who's going to move in your building, and they have to approve you based on what the bank already checked. They're going to see almost the same thing that the bank questioned you. They're going to say, hey, I want to see your tax return. I want to see bank statement. I want to see W-2s. I want to know what's your debt to income. If it's too high, we don't want you here. I want to see how much cash reserves do you have. So they very particular, and in that case, you become a shareholder. So in other words, you always depend majority on them. If you want to sell, you had to ask them for permission if you're allowed to sell. And if you can rent, you had to ask them as well, because it's like sometimes they have like a rules that you cannot rent into after 2 years of buying. If you need to sell, the only issue is that they need to approve who's going to buy for you. So you always stuck like with that association. It's a good thing because in a way that they do check who's moving in. So at least you know that you're going to have all good neighbors. That's a good way, but at the same time, you only become a shareholder. Another property will be, oh my lord, I forgot about which other property. So it's basically those are different type of property that you have, and you had to know the difference between them. You want to find out what the rules, what do they need from you as a customer, because in my case, there have been a few customers that TD Bank have approved them and they are good to go, but then when they do the application to the co-op, they say no, for certain reason, we don't want you to buy in this building. So it's always good you to know. Do we have any questions?
The one last question I see is townhouses, are they like condos?
So townhouses can be a condo or a single family house. They kind of go, it depends on if it's part of a community and they have an association related to them, then they're like condos. If it's just attached to another house and it's a townhouse, but you don't have anything related to the community, you don't have, they don't really maintain your exterior, you don't have to pay them maintenance fees, then they are like a single family. So they can kind of go both ways depending on where they're located.
But I think that some townhouses, they have a maintenance fee. I
Right, and
believe
then
so.
in which case it will be like a condo. Yeah.
Correct.
Oh,
No more
the last question was, are the home buyers educational course online to get the certificate, and how long is the certificate good for?
I believe for 1 year, and they are free. As long as you're working with a bank, and even if you're not working with a bank, you can go online and you can search for, and you can just, it's material that you had to read, and they're gonna ask a question. Basically, if you understand the process, let's say they ask about the closing costs, they ask you for the appraisal, who's gonna pay for that. They also ask about for the inspection. So it's basically simple question that you need to know along the way. I think that as a lender, we need to have like a map to the customer and say this is the step that you need to take to buy a house. Some customer, they sometimes they want to rush some step. They say the inspection. I look at the house. The house look very pretty. There's nothing you can do. I don't want to pay $500. But basically, you're not an expert on that topic. And then if something's go wrong, you cannot have nobody to blame except yourself. So it's always good to go through the process of buying a house. Even if you think that the house look pretty from the outside, well, they're the expert and they will know how the house look in the inside without just really having the picture of it. So it's always good to don't jump some step that we advise for you to take as a first home buyer, because remember, you do know a lot of things from the street because they hear people say, my friend bought a house and this process is different. Every unique mortgage is different. So what your friends went through, what their process went, it might be a little bit different of yours. Their credit might not be the same as yours. They might tell you it's great, or they might tell you, yeah, it's between 700. But then when you put the credit, it might be different. And a lot of people only disclose the good things, but don't disclose like the whole picture of what happened in the process, why this process was different, why it was a stressful moment. Basically, the bank really gonna go deep on you, and they're gonna go to every account. If somebody make a deposit in your account, they're gonna know who make that deposit for you, why it was this cash deposit. And sometimes customers, they get irritated because they've been asked so many questions, but that's part of the deal. That's what you sign for. You want to buy a house, you need to go by the whole process, and then you're gonna have your house.
One question, another one. If I get a second house, what interest rate will I be able to qualify? Can I be a co-sign for another person with an income as low as 350,000? What interest rate can we qualify?
So the interest rate a little bit tricky. A lot of customer focus on interest rate a lot. I think that first you have to find out first, because what the bank is going to do, they're going to calculate how much is your first house that you have now, how much of rental income you're going to receive from that house, and they're going to determine how much you qualify based on the numbers. But they're still going to calculate the house that you have now on your debt to income. So you can still be a co-signer, but it all depends the other house that you want to buy, how much it costs, and how much you'll be able to qualify, still having the first house that you have now. And with the rate, I think that first find a house first, and then you can go to the bank, because the rates are changing constantly. It all depends on the market. So right now, the bank can say, hey, we're giving you 2.3, but then when you actually really find a house, the interest rate might be almost 3%. So it's always good for you to go to the bank and say, when you're ready to buy a house, then you can ask for the rates, because I think that the rates change and you don't want to rush to buy a house because the rates are 2.3. And then what happens if you get a house that you don't like and that you're not happy with it? So focus on first on buying the house, and then you can shop around for the interest rate. And that person that asking all that question, they are expert. They asking good question, like first-time home buyer, because a lot of questions that she asked was really good.
Yeah, and then
Uh,
she said, can we apply for a conversation loan? I don't know what that is.
I think they probably meant
Conventional loan?
conventional loan, yeah.
Oh,
Yes, as long you put as 5% down, you'll be able to do it. Yes. Uh, we were gonna go to the next step. I don't know, we have too much time. But the fixed rate, basically your loan is gonna be for 30 years. The adjustable rate is, say we lock the rate for 10 to 15 years, and then after that, depends on the market, then that'll be your interest rate. That one's a little bit risky. You can take adjustable rate if you know that for 10 years from now, you're going to sell the property and you're moving out, or you're going to use as an investment, you'll be able to use that one. The government loans are FHA. The FHA is 3.5 that you can put down. That will help a lot to the customer in a way that they help you out. The closing costs might be almost the same, but they give you more rebate, more cash back to help you with the system with the closing costs, and allow you to purchase a big house when you don't have too much money. Yes. And for the VA, if you're a veteran, that's a good opportunity for you, because the bank doesn't see your credit score. We do see the credit score, but we don't focus on that. You don't have to have good credit, and you don't have to do down payment. So with any veteran out there, they should actually buy a house right now, because it's a good time for you to do it. The interest rate, you don't have to use no down payment, and you don't have to use the credit. So why not take the opportunity now? So we also have some affordable loans, the right step, which is my favorite. That one, the one that you don't have to pay no PMI, and the interest rate is always super low than the regular one. The rural development, that one you had to, sometimes it take 100% of finance that the bank cover for everything, but it all depends, and it all depends on the area. Down payment assistance, on some banks they do accept programs, they accept assistance. Oh my Lord. I was like, I'm reading it, I'm getting confused of what I'm saying. So it's like, it basically depends who you're working, what type of grant and what type of program you're working with. Well, and again, we're going back to the closing costs. The seller and the buyer come together, and we say goodbye for the last time. So basically, the loan is not that bad. The process is you getting the right answers, because you might get also the wrong answer from different people, that they might have a bad progress process buying a house. But it all depends what their situation was. It all depends what happened to them, or what transaction or things they did with the process to make it that. Because I have some transaction that we closed the loan for 28 days. We didn't ask too much question, and it went smooth, no stress, and it was good. But it all depends as well on the customer. Do you guys want to add anything to it?
I think we're good. Are there any last
No.
questions?
I do want to mention getting a realtor is good, because for them, I have seen houses that they put it on the computer, and when you go see them, it's like, what happened here? Like, who changed? The house was different, and now, so it's good for you to work with somebody, because you know that they're gonna get you a house that they can sell. because they work by commission. So they're not going to work with crappy house if they know that they need to sell the house. And as well, getting the right lender for you, I think is very important. If you ask question, ask as many as you want. That way, this is your loan. You take control of the situation. Let nobody take control of that in a way that you're the one who pick which lender to go. You're the one who pick which realtor to go that you feel comfortable. It's always good to go to referrals that if somebody know about somebody that they have worked before, they already have reference. It's good to go to that people because at least you know that they already have reference, that they're good people and they have worked with them before.
Another good question is, can you combine mortgages from more than one bank?
Can you buy?
Can you combine more than one mortgage? Can you combine mortgages from more than one bank?
Like they're trying to get two mortgage in two different banks?
I believe, yeah.
Or to refi? Can you go if they are with Chase and they want to come to TD Bank? TD Bank will pay Chase and then you can come back to TD? That's the question.
I'm gonna assume that they want to try to apply for two different banks.
So that might be refi. Basically, you do. You go to the bank that you want to go to and say, "Hey, I would like to refi from this bank to TD Bank, from Chase to TD Bank. What do I need to get?" We're gonna ask you for a few paperwork for you to do that. And before that, you need to find out how much will be the closing cost, how much it's gonna cost you for you to transfer from bank to bank, and what's the interest rate. And as well, you calculate how much you're going to save and if it makes sense. Because sometimes you are trying to refi, but then you look at the numbers and they're like, I'm only going to save $50. But don't think about the short term. Think about the long term. Think about it, how much $50 you're saving now, how much you're going to save to the future. So think about your 30 years and not today. Because a lot of people feel that way, that they focus about today and don't focus about the future.
So is somebody able to get like, let's say I apply for Chase and I get an approved mortgage from Chase, but then also get one from TD Bank? Is that possible?
Yes, what you can do is that you can go to bank. But for me, I would suggest to the customers that try to get only one letter from the bank. Let's say Chase approves you. That not necessarily means that you have to go to Chase if you want to get a mortgage. You can go to Chase. It's like for me, I think that when you get a mortgage, you're actually getting married for 30 years in a way that you're going to go in that person, take one person to say yes to you. You're going to start searching for a house. When it's time for you to lock the rate or lock the bank, that's when you should start searching for different banks to see and compare what do they have that the other bank doesn't have and stuff like that. Can you use 5 or 4 different type of pre-qualification? Yes, you can. It's up to you. But at the same time, why would you need 4 or 5 or 2 or 3 if you already know that you qualify? So it's like,
what if I decide I get Chase and I have mortgage and I have TD Bank? Am I allowed to go to use both and maybe combine the money together, or something like that? I'm going by the question.
That's what it sounds like.
Yeah.
That's what it sounds like they're asking.
Yeah.
Normally, no, I mean, not for the same amount you can't, like not for the same full purchase price. It used to be that you can get a second loan to cover like your down payment. You might be able to get a second loan, like a home equity line of credit on the rest of it. They used to do the 80-10-10 type of loans where you can get 80% from one bank and then do a second loan for 10%, and then you pay 10%. So that way you're avoiding that PMI. It's not as common after the bubble. But yes, you could potentially get 2 loans, but not for the same full purchase. Because when you go close, part of the people in the close is the seller, the buyer, and the bank. They're not going to give you the same amount of money for one property because then you're over leveraging and you're taking out too much money on that one property.
So I'm going to ask the final question for tonight. And if anybody going forward has any further questions, I made sure to add everybody's contact information to the chat. You can email us, or you can even email me at helpdesk@bronxchamber.org if you didn't get your question answered. And the last question is, are you required to live in the house for a certain amount of years for a first-time home owner?
That's a tricky question. If you take grants, some grants you have to be there for a certain amount of year. You cannot sell the property. But as a bank, we don't go back there and trying to find out you still live there. I mean that we spying on you. Basically, is that if you tell the bank, hey, I'm moving into this house and that will be there. If you do something different after you do, that will be on you. We're not gonna go spy on you. But if you do take some type of grants or help, they might ask you, you have to stay in this property. You cannot sell this property in 5 to 10 years or 10 to 15 years. You cannot sell the house. So it all depends.
So if you guys have any final statements or mention anything last minute, feel free.
Well, thank you for having us. It was definitely a great conversation, a lot of great questions, and hopefully we were able to add some knowledge and answer some of the questions you had. And again, thank you for having us.
So thank you, everyone, and thank you for joining us. We will be having another one, and we will email everybody the dates of, because we haven't scheduled yet, but me and Diana have to speak on it, but we will. So again, we want to thank you, and if you have any further questions, let us know, and we will follow up with an email with everybody with all their contact information. Thank you again, and have a
Thank
good
you.
night.
Good night.
You
Bye-bye.
too.
I don't.